Hey, I'm going to walk through the report that I just got. So all that happened is a client uploaded. They went to refismart.com. They just dragged and dropped a mortgage statement in here. From there, I can actually create the BorrowGenius report form. So I'm going to show you what that looks like. If you are a mortgage professional and somebody says, hey, can you send me the BorrowGenius report? You can click the for mortgage professionals and it will compare. You can sign up. So pretty simple how that works. Here's what I did then. After I got the information, what I do is it pulls in the address, it pulls in the estimated value. I've got the potential credit score and all of the other information that comes in. I run the scenario and I look at no money due at closing. So in all cases, regardless of the interest rate, we're going to look at a zero funds to close scenario. In this scenario, I gave them three options: 5.625, 6%, and 6.125. They were all 30-year fixed options, and we were comparing the numbers. So as a matter of fact, to keep you guys on track here, here's what this is. Here's kind of the magic of the whole thing. So once I've got it in here, it's going to show me that if you wanted to chase the lower interest rate, which some people do, what would the actual cost incurred be to get 5.625 versus what's the cost at 6.125? So it was a difference of 0.5% in interest rate, but in the closing cost scenario, they're all 30-year fixed options, long, medium, or short. So we just look at the long versus the short. That's comparing 5.625 to 6.125. In doing that, the difference in costs was about $8,800, as you can see right here. The difference in monthly payment was $135 a month. So essentially all I'm doing here is I'm saying, all right, look, if you were sitting at a blackjack table and you had $8,800 worth of chips and you went all in on the very first hand and lost it, you lost all of your money. The difference between these two is $8,800. But by doing so, you were guaranteed to win moving forward $135. Every single hand you played over and over again, you're going to win $135 a month. Okay, well, where do you break even? How long does it take you to win your $8,800 back? Now you can play as long as you want, 30 full years. You can only play one hand a month. How many months it's going to take? 65. So this loan at 5.625 is not cheaper than this loan at 6.125 until 5.5 years have passed. So now the question becomes, do you expect anything will happen in your lifetime over the next 5.5 years that warrants potentially a change in interest rate or the way you finance the house? So I'm not saying you're going to move, but will the market improve? Potentially, if it does and you get out of that loan. If you were only in this mortgage because rates dropped again within 1 year, well, you lost $7,000 because you haven't had a chance to save that money back, right? So when looking at that, in this scenario, this client looked at it and said, well, the odds are pretty good within the next 5.5 years. I will probably change the way this loan is financed if I'm even in the house at all. So we ended up going, looking at this and saying, all right, let's take a 6.125 interest rate on the new mortgage. So the old mortgage, then interest rate is 6.88%. The balance on the mortgage statement was $571,519. Now, that is not their current mortgage balance. And I'll walk through that in a minute. But I wanted to show, okay, based upon this scenario, and if there were no costs to refinance, the break even is immediate, which means we're not going to incur any cost in order to refinance this house. And in doing so, because there aren't any, if for some reason 2 months from now rates were better, we could refinance again and there would be no loss. There's no appraisal, there's no credit, there's no underwriting or processing fees that need to be paid for because they were absorbed into that interest rate. In this client's scenario, they're going to save $237 per month. The interest savings, however, is actually $320 a month. The total lifetime interest savings by taking this loan and replacing it with this one is going to be $89,905. Now, the net change in bank balance I'm going to show you here in a minute because they're not going to make a mortgage payment and get a refund of their escrow account. So the total savings is almost $100,000. Now, what you can see here is this says 571,000, this says 579,000, yet there were no costs associated in that mortgage. Well, how can that be? Okay. Well, how it can be is, oh, by the way, I wouldn't encourage them to do that. I really like people taking the $237 they save, giving it to their financial planner, and allowing them to retire younger with more money. But if they chose to continue making their payment at $44.67 instead of their new payment, which is going to be $42.29, they would actually end up saving about $217,000 over the life of the loan, and their last mortgage payment would be in July of 2051. So let's talk a little bit about payoff and the differences in the mortgage. So in this scenario, the balance on the mortgage statement that they uploaded was $571,519. However, that's not their current balance. Their current balance is higher because today the mortgage balance is higher than it was yesterday, because another day of interest was added, and tomorrow the mortgage balance is going to be higher than today for the same reason. So by the time we refinance them, there's going to be a payoff that was calculated based upon the date we're going to pay the loan off in full, and we anticipated that would be about $2,700. So the mortgage balance at the time we execute the refinance is going to be $574,313. So that alone accounts for some of the difference between these two numbers. Now, in addition to that, let's look at the cost. We've got a lender credit actually that's going to cover all of them, but there will be an underwriting or admin fee, there would be an appraisal, there will be credit, there will be processing, and then on this scenario, we worked with an investor that didn't incur title fees because they were rolled in. So when we're looking at this, the total of all of it ended up being an actual credit back to the borrower of $500, which was great. Now, in addition to that, we are going to set up a new escrow account. So when we do that, the property taxes were collected based upon when the taxes were due, and the property insurance was based upon when their property was going to renew for insurance. Now, the way the BorrowGenius system is set up by default, most people renew their insurance on the anniversary date of when they purchase the property. So this is automatically going to default to an anniversary date of the purchase. Now, when I talk to a client, of course, I want to confirm those dates are accurate. So we can always say, have you changed your insurance since you purchased the home? If the answer is no, then we know this date is correct. That's where we're getting the 7 months property insurance. Also, when you refinance or reduce a rate on a mortgage, there is a difference in interest of the new loan versus the old loan, and we collect interim interest. So in this case, based upon the closing date, there was going to be 12 days of insurance that was being collected to cover the May payment. That way they didn't have a mortgage payment till June, right? So when we looked at this, I think those are the right dates. Now, they closed in March, so they didn't have a mortgage payment in April, so their first new one was in May. So this basically is that April mortgage payment. Well, we set it up with no funds required at closing, so when we looked at it, all right, the total of the payoff, any closing costs incurred, and the prepaids would mean that new mortgage would be $579,584.26 if they wanted to bring no money into the closing table. Now we get the change in bank balance. So they're not bringing any money in, but they will get a refund of their current escrow balance, and the mortgage statement they uploaded reflected $2,830. So that was what we anticipate they're going to be receiving within the next 30 days. If they make another mortgage payment, of course, it would be higher than this, but we'll be conservative and just leave it as the statement reflects. In addition to that, their current mortgage payment, the $44.67, they are not making that payment in April. Well, so that needs to be accounted for. So even though it's a zero cash in, cash out scenario, it's going to feel like about a $7,297 windfall in the fact that they're not going to make a mortgage payment in the month of April, and they're going to get a refund of their current escrow balance. So that's the money that is being accounted for when we look at the lifetime interest plus the net change in bank balance to see what their total amount they're going to save is. So in this scenario, worked out pretty well. We closed in March. They didn't make a payment in April. Come May 1st, their new payment is $4,229. which is $237 less. So just wanted to walk you through the scenario so you know how the BorrowGenius works. If you're interested in refinancing, you can click up in the top corner. By doing so, it's going to bring you to this Refi Smart page, and you can simply go to submit a statement, any one of these pages, and you drag and drop a mortgage statement in here or upload it, and we can go from there. If you are a mortgage professional and you are being asked, hey, I want a more BorrowGenius report before making a decision, you can go to the same thing, hit the mortgage professionals link, and it can come down here where it says become a genius, and you can sign up. So any questions, you can always ping me. My contact information is here. But that's one scenario that just closed on someone that used the